All right, welcome to Drill Down Earnings. We're doing a quick look at the latest results from Zoom Communications. We just call it Zoom because we're on Zoom calls all the day, even when I'm here in a hotel room in Los Angeles in the hot sun because, business can't wait. This is the business story behind One Stock on the Move, and I am Cory Johnson, Chief Market Strategist for the Futurum Group. Zoom, at a really interesting time with this so important company that all sort of grew fantastically during the pandemic, but really has had trouble adopting to the changes since then. We saw some really interesting things in the numbers, in the results that they reported here about that change in their business. I'm going to call it struggle because they're doing great. Q2 earnings indeed were a beat, better than Wall Street expected, but that just tells you what Wall Street's expectations are. When we drill into the business here, we see they had $1.2 billion in revenues, growing nicely, up 2.1% on a year-over-year basis. After a really lousy quarter about a year and a half ago, steady operating margins, EBIT margins, 17%, really good. Now, they changed the way they did a lot of things at this company. One is how they report their big customers, because their bigger customers have smaller margins, right? The average knucklehead that gets a Zoom account actually pays a lot of overhead that the corporate customers won't do. So the result is they've got to cut prices for corporate customers, worse margins for corporate customers. So they like the big customers because they're big, but they hate the big customers because the margins are so bad. It's an interesting struggle. So we look at the growth in corporate customers, those $100,000 or more a year customers, and that was now indeed at 191,600 of those customers, growing at 2.1%. So we'll keep an eye on how that business grows and what it means for these guys. But generally speaking, those customers growing at 7.1% on a year-over-year basis. And that showed some kind of strength, specifically in their online business. Those customers that don't see a salesperson, sign up online, buy the product, never talk to Zoom, just use the product, because it works. How'd the stock react? Well, the stock was up about 2%, and after hours trading down 11% in the last year. Not great. Now, the Zoom, to me, one of those important numbers here was churn. They talked about it. So those customers that sign up and leave and go use whatever else they go use, those churn numbers, they didn't always give us those numbers, but they have for the last almost 2 years now. And those are the lowest they've ever reported. CFO Kelly Steckelberg, who is leaving the company shortly, but this is her last conference call, I expect. But she talked about the improvement they've seen in retention rates.
We see ongoing improvement in our retention rates there, which I think is reflected about all the great progress we're making in the platform, including all of the Zoom AI companion features that Eric just talked about, which are included for our online customers as well that are paying. And so that's been really great to see.
So yeah, all of the new products they're offering seem to be keeping customers along a little bit longer. The churn rate's down to the lowest they've ever reported. They've only given us the number for 2 years, but that's good for Zoom. Let's talk about the real big takeaway here, the number that meant a whole lot, right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So Zoom's second quarter earnings are just out. This is a classic Zoom setup in a hotel room in LA. Why not? But I want you to know these numbers. $1.2 billion in revenues. That's not the most important thing for this company of the quarter, although it's up about 2.1% from the year before. To me, the most important number, the drill down earnings bite, the one number that tells us a whole lot, was 2.9%. Only 2.9% of their customers left the platform. It's the lowest churn rate they've ever reported, and that's good news for Zoom. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson. Drill Down Earnings, of course, is part of 6.5 Media. And Drill Down Earnings, of course, can also be found not just on the 6.5 YouTube page that you're on right now, but check me out on Cory TV. Leave me some comments. Tell me what you think. Tell me what you'd like to see more of or less of. More LA, less LA. I kind of like more LA. And of course, you can check us out on Instagram and TikTok at Drill Down Pod.